Hey traders, welcome back to this shortened trading week of Tuesday, June the 21st, 2022. Hope you had a nice weekend off. I definitely did. I slept in all 3 days of the 3-day week and it felt great. But we're back at it again here with the shortened trading week starting off today with Tuesday. Let's get into our trading preview and market analysis so that we kind of understand where we're looking at. We do look at the weekly technical indicators in this review. We do obviously drill down onto that into a daily setup here as we trade on a daily basis. But we are in a overall still strong sell mode in the marketplace. Pretty much everything that we are looking at implies that we are still in a bear market. We're still headed down. We'll talk about that in just a second in a little bit more detail. But pretty much all our indicators still very bearish. Now, when we look at key support resistance levels, you know, the futures markets are up right now about 60 points as we're getting ready to start this trading week. But that doesn't really change the overall complexity of this marketplace. You know, it's no surprise, obviously, that the bearish trend is continuing from a technical standpoint. 9 of the last 10 weeks have just been absolutely brutal for this marketplace. It's been great for us as traders, but it's been pretty ugly for the E-minis. It's only the 4th time in the entire history of the stock market that's happened, where we've had 9 of the last 10 weeks just be down, down, down. And you know what's interesting? You would think that would put us into a very oversold position, a position where, you know, the RSI and the Bollinger Bands and whatnot are very oversold and we're looking for a snapback rally. Well, in all 3 of the previous cases, it was 1970, 1982, and 2002. When those previous events happened, it did not mark the bottom of the marketplace. And while, again, obviously, we're going to have some snapback rallies and we're going to have some short covering here and there, what it really implied is that the bear market was in full effect and that we were not anywhere near the bottom. So I continue to seriously doubt that the bottom is in here. Although, again, I'm quite confident that we'll have some nice bounces. We'll have some nice short covering rallies. But since June 16th, really, we've just been back into another consolidation mode. So I talk about this a lot, how the market, you know, as traders, we could care less what direction it's moving. We don't care if it's going down or up, but we do care if it's moving. And so there's really only 2 markets for us, and it's not bear and bull markets. It's consolidating markets and expanding markets. And we just kind of want to be able to understand where we're in the marketplace in terms of consolidation versus expansion, so that we can understand how to approach our zero DTE trading. Do we start with a full iron condor? Do we start with a directional trade? And that just depends if it's a consolidation mode or an expansion mode. Well, we've been in consolidation mode for quite a while now, since probably June, maybe even 15th. You could go back to the 15th to look at that. And really everything on the E-minis between, I would say, maybe 36.30 and 37.10 has just been what I call a slosh zone. There's really no definitive trend there. There's bear traps and bull traps in there. It's a lot of chop, and it really hasn't meant anything technically to the marketplace. So I think, you know, as we start off the market today, again, the futures are up about 60 points right now, around 37, 38 as I speak, about 2 hours before the market opens. 37.15, which, you know, we're solidly above that right now. But 37.15, I think, for the bulls really needs to hold. And then probably 37.60, and then that big 3800 demarcation point, and then maybe 38.30. But really staying above 37.15 and then trying to get up past that 3800 level is going to be critical for the bulls. For the bears, 36.35 is quite a ways away from where we're at right now. You know, it's almost 100 points down from where the futures are looking to open up right now. But that would be an area that the market probably needs to break back down through to get back down to where the major support area is around 3,500. 3,500 is a big level for the marketplace here. We haven't had a lot of really strong support levels. As you can see here on the chart, as the market has come down and down and down, but we're getting there. That 3,500 level, really, really big demarcation point. It's a 200-week moving average. It also marks the 50% retracement of pretty much the entire bull market from 2020 all the way through 2022. So that's a big level, and we're getting closer and closer to that. So if we're not to the bottom here of the marketplace, I do think that we're probably getting closer. But nevertheless, trend is obviously decidedly bearish. Monthly sector rotation, again, not a lot of change here. This is a month over month, and so we'll have a new set of numbers coming out here about a week and a half to take a look at. Our heat map, obviously just brutal, just brutal. You can see 2 weeks ago what the market looked like. We had a little bit of strength in energy, but that was pretty much it. And this last week, well, pretty much everything just got slammed last week once again. It's pretty crazy to see these kinds of numbers put up week over week. There are times, of course, when you'll have specifically the NASDAQ get hit like this, but to see 2 weeks in a row of just absolute decimation in the marketplace like this, it's pretty telling, really, in terms of the strength of the selling that we've had. And I feel for the traders that are out there with just, buy and hold, or that are, heaven forbid, bullish in this marketplace. We have had such success with our trading because we love this. This is absolutely just manna from heaven for us. But if you're not a trader and you're an investor and you're in a buy and hold, or you're trying to buy and go long something in this marketplace, it's been pretty tough. We look at the put call ratio. Again, when the put call ratio is above 1, that's when put volume exceeds call volume. And when it's below 1, that's when call volume exceeds put volume. Just a market sentiment guide to see if the market is bullish or bearish. You can see 2 weeks ago we were at about $1.28, and we're at about $1.13 over this last week. Not a huge change in volume either. Not really anything substantively changing there with the put call ratio over the last week. However, we do look at our open interest levels here in options, and that's a big thing that we look at here. Obviously that 4,000 level, that continues to build, but there's a couple of notes that I would make here. Number one, again, you can obviously see that puts are way outstripping calls in terms of volume, and that we're getting a lot more as the market tries to consolidate more and more. You're getting more and more of these put and call walls, these gamma areas that we talk about, and it's getting a little less definitive. You don't really have the big, huge demarcation points up above the market and down below the market like we used to have. So again, it's just the market trying to search for a bottom. And I still don't think that we're there yet. Expected move for the week. Well, it does look like it's lower. Last week was about 132 points, which is, man, that's what we want. That's what we need volatility-wise in this marketplace. As traders, anything above 120 for us is just fantastic. It's still really, really good this week. Keep in mind, of course, that we are trading on a shortened schedule this week, and so you only have 4 days of expected moves factored in there versus 5. So we're pretty much right on par with last week in terms of expected move, and that, again, bodes quite well for us from a trading standpoint. If we look at the S&P technical heat map, which I like to use the heat map in terms of sort of mapping out the technicals, you can see pretty much across the board here, RSI with Bollinger Band. We're still inside the Bollinger Band. Your MACDs and your histograms, decidedly bearish. No turns there, no hooks. And even on our sort of leading indicators, if you will, the stochastics, we don't have a hook up yet. So pretty much everything across the board still looking very, very bearish. We've absolutely fallen out of bed here this last week. breaking through a substantive support level. So we'll see what the market can do this week with a little bit of a shortened trading session. But right now, again, still looks very, very bearish. We look at the Fear Greed Index. Again, it's sort of just a sentiment reading, and it is a little bit of a contrarian indicator. When we have areas of extreme greed, that's usually a good time to bail on the marketplace. And when we have extreme fear, that's usually a good time to jump in and buy. Baron von Rothschild's famous saying, you want to buy when blood runs in the streets. Well, we're getting there. We've got some extreme fear. We've been in the extreme fear area for quite a while. You can see a month ago we were here, a week ago, the previous close. We've all been, pinned inside of this extreme fear area, but we're just not really getting that capitulation. We've talked about the VIX over and over again, and yeah, we got a little bit of a spike here in the VIX, but a move from 25 up to 32, 33, that's not a big move. That's not a big move in the VIX, and it's still well within its consolidation pattern that it has been in for pretty much this whole entire year. Since the January of this year, when the market started to change its complexion and move from bullish to bearish, we've been able to come up here and hit these levels and not really surpass them, not really have a lot of capitulation. We've been shorting volatility inside of our AST program pretty much all year long, and that's been a tremendously effective approach for us. Couple things that I'm watching on my watch list this week. Well, number one is energy, just energy in general. I'm looking at coal. One of my favorite ticker symbols there is BTU. Looking at nat gas, and I'm looking at oil. There's a lot of activity going on in this sector right now. Coal is just absolutely just exploding, has some tremendous strength. Nat gas is imploding here in the U.S. with the Freeport-McMoRan situation going on, and basically about 2% greater supply in the United States than we had anticipated we would have. And these refiners, they can't go offline. They can't just do it with a light switch. So we're going to have a little bit of oversupply of nat gas here in the U.S. for a little bit. Of course, that's hurting the nat gas prices in Europe and elsewhere in the world. But right here in the U.S., nat gas is very, very weak. Oil, still obviously strong. And so there's some activity there. There is some volatility there. There's some good premiums in all three of those. Another thing that's on my watch list for this week is crypto. Now, most of you are probably familiar with BITO. It's the futures ETN that you can use to basically trade the cryptocurrency, Bitcoin. Well, now you've got BITI, brand new ticker symbol on there that will allow you to short Bitcoin. It's basically an inverse, so it allows you to take advantage of Bitcoin's crashing. Brand new, just getting started trading today, I believe, is its first day trading. So keep that on your watch list. That's something that you should probably have in your tool bag as something that you can trade with. Bitcoin is a pretty good trading vehicle. You don't need to buy into it. You don't need to believe it's a store of value, but you can certainly buy into its volatility and its movement, and now you've got a little bit extra in terms of how you can go trade it. Trading activity for us this week, it's a pretty straightforward week for us. Tuesday, which is today, we've got home sales out at 10 a.m. Eastern time, and we got Fed speak going on all morning long today. So both of those could potentially move the market. Tuesday, of course, today with the shortened week replaces our normal Wednesday trading day. And so it is a typical busy start to the week for us. We have a 0 DTE that we want to get started with. We're going to do a 3 DTE SPY trade, a 3 DTE Q trade, and our old wonderful standby IWM credit strangle. So it should be a busy day for us today. We will take a look at putting a 1 DTE overnight index trade on near the close. Sometimes we get those on, sometimes we don't. We do want to have a setup that looks, favorable for us. We don't want to just throw it on just to throw it on, but we'll definitely take a look at it today. Tomorrow, Wednesday, we do have Powell speaking at 9:30 a.m. Eastern Time. And we're scheduled, obviously, for another 0DTE index trade. That'll be our focus for Wednesday. And then we'll, again, look somewhere around the power hour, look for a 1DTE overnight index trade, see what we can find there. We've had a couple of those last week that worked out quite well for us. Thursday, we do have initial jobless claims coming out. We've got Powell testifying again. We've got nat gas numbers coming out. We have a pretty big nat gas trade going on right now. So we're going to want to keep our eyes on this. I think our nat gas trade, if I remember correctly, expires next Monday. And so this will be a critical day for us here, this Thursday nat gas numbers, in terms of how we manage that trade. And we've had some very successful oil trades. We will want to look to reinitiate one of those again on Thursday as well. So in terms of trading on Thursday, we are going to look at doing a 0DTE. We'll be starting with the butterfly. We will not be in the Zoom session on Thursday, today, Tuesday, and tomorrow, Wednesday. We will be in our live Zoom session. On Thursday, we're going to start with the butterfly. It's a little easier to manage trade because we will be live in the scalping room all day long for our Zoom feed, looking for scalps, looking for potential swing trades, etc. But we will be probably looking for, I don't have it added in here right now, but we will probably be doing something with our nat gas trade, and we will look also to initiate a new oil trade. So didn't get that put in here, but we will look to initiate a new oil trade on Thursday. And then, of course, and again, another overnight index trade if it makes sense for us. Friday, we do have the ECB and the Fed speaking all morning long before the cash open. Quite a few people on the docket there. We've got all of our commodity softs reporting their sales numbers. That would be, our corn, our wheat, our soybeans, and we might take a look at those here. We do have, obviously, we have a soybean trade going on right now. Our soybean trade is set to expire on June 24th, 3 days from now. So that would put us right on schedule here. And so we're going to obviously want to keep an eye on that. With our trade expiring on that day. And then again, of course, we will be looking at a 0DTE index trade on Friday, and that pretty much winds us up for the week. We are usually worn out by that point. We don't look for any bonus trades usually on a Friday. So that's sort of our schedule for the week, guys. Our updated performance schedule just continues to be awesome. I'm so pleased with our results. I don't know what to say other than to just continue to try to prepare all of you for worse results, because our results cannot physically get any better than they are. We've had 73 days of 0DTE opportunities. We've done 117 total trades. 114 of them were winners, 3 were losers. Do remember that we do have that private link inside of Discord. So go to the top of Discord, hit the pin, go down there, a couple of links, and you'll have access to every single one of our trading sessions. Remember, we record everything. We document every trade that we do. Very important, I think. Our 4DTE trades had a great week again last week. We're up to 84 wins and 7 losses there on those. That's been nice for us. Our IWM weekly credit strangle trade. Guys, I don't know what to say about this trade. It has just absolutely been phenomenal for us. It has been just a moneymaker. It has been ridiculously consistent. It's one of our cornerstone trades. We've had 23 total opportunities this year. We double dipped on 1 week for 24 total trades. All of them have been winners. Every single one of them have been winners. On par for very close to a 60% annualized rate of return with that strategy. It's just been wonderful. Pairs trades. We were able to lock 2 of those down last week. We've had 3 pairs trades working for a while. We were able to book 2 winners on those last week. One was not that great. It was about a 2% return, but the other one was about a 10% return. And the one pairs trade that we do have open right now, I think we might have a shot, maybe even as early as today, to get out of that one at a profit as well. That'd be nice. We could get some new ones started. I'd like to get some new pair trades going. Those have been obviously awesome for a market that is crashing. They obviously do not care what the market's doing. Bear market trades, we did close out our bear market trade. Excuse me, we did not. We have still one trade working there. I should that's a misnomer right there. I should have one still open. We do still have one trade open. That's on Merck, and I'm not sure why I don't have that one showing up there, but it's still working. And I think on our Merck trade, we've still got about 10 days to go on that particular trade. Our Tuesday, Thursday 0 DTE sessions, we do break those out separately than our Monday, Wednesday, Friday days. We use a different strategy here where we start off with a very asymmetric setup. We're only putting a few $100s at risk with a nice profit potential. And then if that doesn't work, we do some type of a dynamic overlay on top of that trade to bring the credit back around into the profit zone. And it's a nice approach. It's a different approach. It's a little bit more passive, a little easier to manage. And that was great for us. It has been great for us. We've done 13 of those total trades in 2022. All 13 of them have been winners. Average return last week was about 13%. We had one that was that hit our butterfly just perfectly, and that ended up being about a 24-25% return day. And so it bumped our average up quite a bit on the week. Scalping was just fantastic last week. I did turn most of my scalps into swing trades, and then I covered those trades. And so you can see because of that, that I've got some carryover there rather than just the normal Tuesday, Thursday sessions. I've got a carryover into Wednesday, and I've got a carryover into Friday. But scalping was probably one of the biggest percentage-wise areas of profit for me for last week. Tuesday was an awesome day. Wednesday was an awesome day. Thursday was incredible. And then Friday was solid as well. So it was scalping was a big part of my overall profits for the week last week. Again, with our shortened week this week, we've just got scalping this Thursday. Our AST program, again, kicked butt over last year. Whoops. This year, I am just blown away. I didn't think we would be able to improve on last year. And I need to get some more detailed videos out for you guys on AST. We still probably have more misunderstandings about AST than any of our other programs. People say things like, boy, the market's really bad right now. Is it a good time to get into AST? That's the perfect time to get into AST. The worse the market does, the better AST performs. Ideally for us in AST, we would hope that the market never, ever turns a profit ever again. We have absolutely just been dominating the market this year, and we've been doing it at almost 70% or so less risk. And we measure risk via standard deviation. So people, again, they look at our approach and they say, well, I'm worried about risk. That's the whole purpose of this program. It's a dual-fold purpose. Beat the market returns. That'd be great if we could do that. But the real key is the dual-fold part, the second part, which is do it at less risk. And the low volatility that we've had in this just been fantastic. The ability to watch the market crash, the ability to watch the Dow go down 800 points in a day, and our account value doesn't even budge in AST. It's just been fantastic. So I just can't say enough good about the AST investing program. Our dragonflies and double diagonals, these are a little they're a little tougher for us to find. We can't necessarily pump out one of these every single day, but man, they've been nice. We just started tracking these and doing these here, and we had one dragonfly on GME, and then we had a double diagonal as well. And both of those ended up being very, very nice winners. Really nice ROI on those trades. So they're cool trades because they give us some nice protection from a risk raft if you view them in a risk raft. But they also had some really good ROI potential. So very happy with those. So again, just couldn't be more thrilled with our performance. It's really, really tough to have expectations of anything better than this. So again, prepare yourself for the worst because it can only go one way. It really can. We can't do much better than what we're already doing. A little bonus trading gift for you folks today. I'm going to re-include in our bonus training channel the VIX income straddle approach, a way to make money off of setting up a specific approach to using a straddle on the VIX. The VIX has obviously been in the news, and it's been fairly volatile, and it's been a good income producer with this particular strategy. So I will drop the PDF version of the rules for this strategy for you into the bonus training channel. As always, guys, I'd love to connect with you. If you'd love to touch base with me via Twitter or the YouTube channel, I would love to hear from you. We also have, the asymmetric trading system. If you're interested in more investing and portfolio asset allocation, we've got a free trial for you right there that you can try. If you want to try our live trading room, you can come check it out for free for a week and trade with us as well. And we have access to our scalping program too, which on a normal week would be every Tuesday and Thursday. This week it's just Thursday. But you can come check us out. Come contact me. Let me know how your trading's going, what you're doing. I always love hearing from you guys. And again, I want to give my gratitude and thanks to you guys. This last week or so, as I had COVID, it was a little bit of a struggle for me to keep the trading room running, and you guys were just a great support, and I always appreciate that. So thank you guys once again for being a part of the program, and we'll see you in the live trading room here shortly.